The Hedgeless Horseman here. It's August the 14th, 2023. I'm gonna do a kind of a copium video. I shouldn't really call it copium video, even though that's, I guess, in effect how it works out to be. But I mean, the point, what I've been trying to do with, I don't know how many videos now, is to, I mean, it's a mindset thing. When you really understand how you make the big money, let's say, which comes from the big moves, you should start to get greedy instead of, needing copium or hopium, because that implies that you're barely hanging on. Then obviously that's almost the opposite of being greedy. That's the problem. It's like you have to understand that almost nobody, not your neighbor, not your friends, not your family members, almost nobody on Twitter, almost nobody in the forums actually knows what they're doing, actually knows how you make big money. Everybody that is investing, and they do exactly what they think is right. Otherwise they wouldn't do it. But only like 1 in 20 actually beats an index, and 1 in the, I don't know, 10,000 becomes really rich or whatever. So it's like you have to really understand that nothing what you're seeing or reading out there is typically worth much. That's just how it is. 95%, easily 95% of all comments, all tips, all whatever, that is coming from someone who doesn't really get it, if you know what I mean. Some make okay money, some might underperform some years, overperform some years, yada yada yada. But it's typically not, something to sneeze at. I mean, today, for example, I've been just arguing with a few trolls on Twitter. And it's like, I already know that they are bad investors, because not most of what they say doesn't even make sense. It's like some guy, who called me a, paid pumper, and again, like, which is kind of typical, brought up Novo, and that I should take accountability. And then I asked, okay, so what about Snowline, which is up over 1,000% since I talked about it? How do I take accountability on that? Then he changed subjects, of course. So he's just after throwing shit, just trying, of course, to bring other people down. That's what most people major in. They don't focus on themselves. They don't take responsibility. They just throw shit at other people. And if you follow me on Twitter, you probably notice that I don't really do that. I don't go into someone else's thread who says, this is how you should yada yada yada, or I like this, or I like that, or I don't like this and that. It's like, that's their opinion. They can have that opinion. I don't need to insert myself. But there's a lot of people, I know what my returns are. And I have asked every single basher. It's like, well, if I'm so wrong, show me your long-term, portfolio returns. No one, 0 people have done that. Which proves my point. I mean, they want to be right, they want to whatever, and it's like, I know, because what they say doesn't really make sense. So when I ask them, well, show me the proof, your long-term results. I mean, anyone can be up or down on a year or 2 years or even 3 years in this sector. It is no catastrophe to be down even 50% or even more than that right now in the junior space since the last top. The median junior is probably down 70%. But everybody seems to believe that, okay, if a stock is down, that means it, oh, that was a bad buy by definition because it's down. I mean, they have no idea what they're doing. Bear markets in this sector are worse than almost any other sector. That's just how it is. 80% of the time this sector sucks, 20% of the time you make everything back, and hopefully more. But they don't even understand that. They have no idea what they're doing. They have no idea how this sector functions. They don't know they should be buying because they're whining. They're whining about how shitty this sector is. But it's like, let's look at a few people. Okay, Crassus, the richest man in Rome. He started a fire brigade. And when a house was in fire in Rome, he went there. And as it was burning, he didn't put out the fire. He wanted to purchase the home before it was reduced to cinders for a fire sale price, obviously. So I mean, that's how one of the reasons he became rich. He bought stuff at fire sale prices, literally fire sale in this case. He bought stuff that was cheap, and the thing with those houses, they were actually getting burned down. Some of the juniors out there that are selling at fire sale prices haven't even had a fire. So imagine if, he runs up and buys something at fire sale prices that's literally going up in smoke. But there's juniors out there which are not even on fire, but still are selling at fire sale prices, and people complain about it. Or we have another super wealthy guy, Rothschild. The famous buy when there's blood in the streets. He should know Rothschild made a fortune buying in the panic that followed the Battle of Waterloo against Napoleon. Contrary investing at its heart, the strongly held belief that the worst things seem in the market, the better the opportunities are for profit. I mean, that's the thing. I don't even like to call it contrarian, because the thing is, like, we're in the commodity space. Sure, gold is, mostly a monetary asset, and silver is like 50%. But the base metals, at least, they're the basis for civilization. If no junior found any more deposit, when all the mines that are operating today, which will run out of war, then civilization stops. But people actually believe that for some reason, every single time we get a bear market, they believe this time it might actually go on forever. Who knows when this is going to turn? It's like, are you kidding me? This is like the most basic sectors of civilization. And you think that's gonna go away before Apple? No. Apple couldn't function if there was no mining sector. We wouldn't have Apple without the mining sector. We wouldn't have pretty much any company if there was not a mining sector. So it's beyond obvious. This sector is not going to die. And actually, as Rick Rude puts it, the bear markets are the authors of bull markets, and bull markets are the authors of bear markets. What happened here? Mining sector was so sucky that the likes of Glencore, etc., shut down mines. Then boom, everything went up. Now we're back here again. Where do you think the next move is going to be? This is not rocket science. But people, I've seen comments recently, it's like, it can get worse. Think about that. It's like when people follow macro and all of that stuff, it's like, how many macro factors do you think are going to typically look really good at the best possible buying opportunity? It's supposed to look the worst ever, and in this case it's not even the worst ever. Gold is at 1950, silver hasn't performed that well, but it's not like the whole mining sector is running at a loss. But it's creeping in, the cost inflation, it's creeping into the copper miners, etc. But okay, let's play that one out. Copper or whatever doesn't really go up, inflation keeps going up, and I see even that as a reason for people to not want to, buy juniors because, cost inflation. I mean, are these miners in operation? Of course not. Do you know what the margin is going to be in 15 years when any of these might have a mine coming on? No. And what's going to happen if the sector gets shit enough? They'll close down mines, and the prices will spike, and the juniors will spike, and the miners will spike, the larger miners. So again, everything gets taken care of. The fact that it becomes shitty and gets shittier is the whole reason why it's going to turn around, because there's cause and effect. If the margins shrink, miners can't make a profit, they're going to close down the mines or go bankrupt, which takes off supply. And obviously, prices would have been quite low at that point, which kind of, helps offset the demand loss because it's at least cheaper to get that going. And maybe some infrastructure projects get started, whatever. Or take Erik Selin, which is a quite famous billionaire in Sweden. He started off on the wrong foot. When the speculative economy of the 1980s collapsed in the early 1990s, Selin lost his savings. So starts from scratch. So imagine it's like you pretty much are wiped out right now. What other better time to be if you like miners? If I started from, almost zero, when would I want to find this sector? Here, of course, or here, or here, or here, or here. If I have made money in the sector and have a lot of money, when would I like to invest in this sector? Here, or here, or here, or here, or here. It's the same answer. When it's friggin' cheap. When there are fire sale prices. When the value of the assets are not reflected at all. It's just absolutely crazy how cheap you can buy some stuff now. I mean, some stuff, again, hasn't really done anything, but they're trading at, gone down in value, but they're trading at 5-6 year lows. There's been stocks, I have been the only buyer, for a week and a half in the whole world. Anyone who could have bought that stock did not buy that stock. So apparently nobody agreed with me. I'm the only one on planet Earth that can buy that particular stock who thinks it's cheap. And it's absurdly cheap. Do you get any better signs than that? And I posted this one here. I think it was yesterday. I don't know when the bull starts for real, but it will be of biblical proportions. The setup looks better in 2015. This is new listings and equity capital raised. Done by CEO.ca. I don't know if it's, run rate that it projects for the whole year or if it is literally to May, I think, May 31. So I'm not 100% sure if it's, this run rate, you double this bar, for example. Still, it's friggin' low. It's like it would be 2015 levels in that case. And it feels like it's actually been getting worse last few months. New listings. And that's with a lithium boom. Equity capital raised. Yeah, that's not a lot. Okay, if that's double, if that doubles, what's that like? 2.6 maybe? Yeah, maybe on par with 2015. We know what happened after 2015. That was the most epic rally in juniors in one quarter ever, I think. And I was a part of that. Do you know do you think I knew that was going to happen? Absolutely no idea. I just wasn't stupid enough to sell, and I wasn't stupid enough to hold. I was buying all the way down to the bottom day. I remember the bottom day. I think I picked up silver standard that it was down like 10% when silver was down like 1%. It's kind of like I was going to say today, where it's like the metals are not even The metals are not even down that much. Like gold minus 34, but it's like I have some juniors that are down like 6-7%. That makes absolutely no sense. That is somebody that is making a terrible mistake. Might be sooner or later it's going to be the costliest mistake they will do in 8 years. Because in my opinion, anybody who is a net seller right now in this sector is absolutely making some of the most absurd mistakes you can make. You don't need perfection. You just need to not make the big mistakes. Why would you sell here? Why on earth? What makes you think you should sell here? Anyway, back to Erik Selin. So he lost his life savings. Then as a 24-year-old, he bought his first rental property in Ängelholm after borrowing 20 million from the bank. That must have been, I mean, 20 million is a lot today. And I've heard somebody tell the story that something like, I mean, that he could actually borrow an obscene amount. I'm not, I read somewhere it said, he was long by 200%, but I think it was actually much more long than that. But he had, as far as I understand it, showed the bank that the rental property, the price made absolutely no sense, because he showed them, cash flow calculations, net present value, whatever, how you value real estate, rental real estate. He showed that, hey, this is worth this much, but it's selling for this. So if you lend me like, 90% of the purchase price, it's not as risky as it seems. I'm not 1000% long, because the value is obviously much higher. But think about that. We would never have heard about this guy. He would never have become a billionaire if he didn't borrow a whopping 20 million as a 24-year-old in the worst real estate crash that I've heard of in Sweden, at least since last 40-50 years. So think about that. What did he do? He found himself, after being pretty much wiped out from earlier speculation, he found himself at a time like this when everybody was running around with hair on the fire. People were selling, not because the properties were overvalued, because they had to, or they feared that it could get worse, whatever. No buyers, just a bunch of sellers. So he went extremely long, and then 34 years later, 33 years later, he's a billionaire. That would never have happened if he did not get the opportunity, if he did not have a fire sale opportunity presented to him. That's A. B, recognizing it for what it was, and 3, putting the pedal to the metal. Because that was a ballsy thing to do. 24-year-old go in, and it's the equivalent of borrowing 2 million US dollars. And he was able to convince the bank, etc. So obviously he's very smart. But that's what they do, the greats. They buy when there's blood in the street. They buy when literally an asset is on fire. They buy when the worst real estate crash has happened. You wouldn't have heard about Landins. They're famous for buying stuff at fire sale prices, like Fruta del Norte. Ecuador was left for dead. Great asset. Price was absurdly low. They bought it for 250 million. Today I think Landin Gold is worth, 6 billion, 7 billion. If you get even one fire sale purchase correct, that could obviously, when the tide changes, and in this sector, fortunately, it always changes. This is why, again, like Pierre Lassonde, this is the easiest sector in the world. Personally, I have no idea how anyone is expected to lose in this sector over the long term. And if you're down a lot over this period, that is, again, what's wrong with that? It's a 3-year bear market. Are you stupid because if you were, long all the way from up there to down here, is it absurd that you lost money? Of course not. This sector has some of the most bear market, most brutal bear market moves there is. But that does not give you the right to do an even more stupid thing. I mean, you can afford buying high, but you can't afford to sell low in that case. You can't, I would say, I mean, personally, like I've said a bunch of times, there's a huge difference between buying, selling, and holding here. Selling is like, well, you probably walked away, in my opinion, from, again, the highest forward-looking returns you might get for the next 8 years. If history is any guide, if the Bear Creek Mining as a proxy is any guide. Holding, well, yeah, but obviously if you thought or you understood that, hey, this might be the best, highest forward-looking returns we'll get for the next 8 years, would you be holding then? No, you would obviously be buying. So I can't see how anybody who's either selling or holding has a chance in hell to beat this market. But anybody who reaches the mental state or mentality that they actually get it, they start to get it. They start to get why these billionaires actually became so friggin' rich. And it was all centered on buying assets at fire sale prices, knowing that one day they're gonna be expensive, because this sector never ever stays expensive forever, never ever stays cheap forever. But people forget that, even though it's the basis of civilization. If the mining sector goes away, everything goes away. That's not gonna happen. That is not gonna happen unless we start mining asteroids, which might happen in, I don't know, a few decades, or aliens destroys us, whatever. So it makes absolutely no sense. Absolutely no sense to be bearish here. I'm losing my mind. Today, for example, I'm seeing these juniors that I already own. It's like I see them go down 6%, and I'm like, Jesus, I don't know, maybe the 6% discount today might add another 20% of returns over the next 2-3 years. So it's like, the opportunities are going absolutely ballistic, and I'm going crazy because right now I don't have any dry powder. So I know 100% what any of these people would do at a time like this. I know what you should do. I know what makes sense. It should be friggin' obvious. This whole this slide here is pretty much the reason why Pierre Lassonde call it the easiest sector in the world, because it always crashes and always rallies, and will forever and ever and ever go like that. You don't get opportunities like this often. Eric Selin, we haven't seen a real estate crash, I think, as bad as this. So he hasn't had a chance in 33 years to get a similar opportunity. That might come around the corner. I mean, rates are going up and all that. But for 33 years later, he has probably never had as good of an opportunity as he had that one time in the early 90s. And the Napoleon War, obviously, the Battle of Waterloo, one-time event. That might, who knows, maybe that lasted for, the panic lasted for a few weeks or months or a year, I don't know. But it's not perpetual. It didn't stay that. The panic got resolved. It's the same thing here. I mean, it's just absurd how much time we were able. I mean, these are already, I would say, cheap prices. Here, probably high quality juniors are already cheap. Down here, they're absurdly cheap. So you had months and months of being able to buy. And I've shown this before, that's like you can draw a line like this, that I think this is 100% return. So you would make, if you just started buying, you put a monkey behind your keyboard and started buying some, above average quality juniors, or even indexes or trading sardines, whatever. If you just started buying and bought every month down, and you lowered your average to here, you would make make a profit. Same thing here. You just bought all the way down, maybe average here, okay, made money. Bought all the way down, maybe average here, made money. Now we're here, and we've been here for quite some time. I know how rare these occasions are, especially given that the fundamentals look so good, meaning that the supply demand is looking increasingly favorable. Sure, everybody's worried about recession, and all of that, and that's why people. That's what people are afraid of. Make no mistake, people didn't sell juniors today because gold is down 35%, 0.35. People sold today because they saw gold down today, they saw someone sell some stocks, and they believe that they will go down more soon. They're not selling because it's down today, they're selling because they think it's going to go down more. And when it's up, people buy because they think it's going to go up more. Because otherwise you can't explain, because a 0.35% drop in gold is absolutely meaningless for any gold junior. If anything, it might be better because it puts more pressure on the producers. But sentiment doesn't work that way. When you start to digest how dumb this sector is, then you can make money forever in this sector. People literally, I'm not joking, people literally believe that even a sector, called a cyclical sector, for some reason stops being cyclical at every top and every bottom. That's why volumes are up high up here, because everybody wants to buy, and now there's almost no one left to sell, almost. But it's just crazy. I know I'm gonna make a lot of money in juniors. Some, I think, have a shot of going up. When we're up at these sentiment levels, might take, I don't know, let's say 2 years. I think some will easily be 10 to 20 baggers. We've seen Snowline become I guess more than a 10 bagger, but at least a 10 bagger over the last 2 years, and that's in a bear market. You can imagine a journey like that, or even half or a third of that journey, fundamentally wise, with a tailwind of increasing sentiment. No, it's just unbelievable. Again, it's like I'm going crazy, and I can't, for the life of me, figure out how people can be bearish now. And the point is, I've actually been working on a few topics, because I might need to hold a presentation somewhere relatively soonish. Well, okay, maybe it's gonna be hard to just jump in here. Well, I can go to common mistakes. Okay, what I think is like too many inputs. Again, everybody's looking at rates, what the Fed's gonna do, where the yen is going, inflation, whatever. It's like, how on earth are you gonna make a decision based on that? Is everything if you have like 30 things you watch, do everything need to look right? I look at one thing. What is the company priced at? What do I think it's worth today? Where do I think it's gonna go in the next 2 years? What could it be worth if I think that these 30 news releases over the next 2 years will happen? So in that case, again, it's like, if you're right on your base case or get close to a blue sky, hey, it's like Snowland. Hey, I think they're gonna prove up an $10 million ounce deposit or more. Do you care if gold is down 10% or up 10%? Do you think Snowline would go from a few drill holes to one of the, largest gold deposits discovered in the world recently without going up? It's up hundreds of percent in the worst bear market since 2012, 2015. expecting to look right in the short medium term. Again, that's the all the the shit you typically get if you have, as in my case, sponsors or talk about companies, etc. Quote talking your book, because I always talk my book, because I pretty much only talk about, well, except Bear Creek Mining, talk about stocks I like and I own. I don't see why I should be talking about stocks I don't like and don't believe I should own. But if they're down, you'll hear about it. Despite the fact that 98% of juniors are down over the last 3 years in the gold space, for example, doesn't matter. People like to just and since they don't get that they imply that price always is an accurate description of value. The market is always right. Okay, so then I already also know that they have no chance in this sector. They have absolutely no chance if they think the market is always right. That's the underlying assumption of stock picking. That you think the market is wrong. But hey, it's like, thinking is not most people's strong suit. Believing that individual profit losses mean you were right, wrong. That you can know 5 to 10 years later what your portfolio has done. I have no idea. I didn't know Snowland was going to do what it did. I didn't know, losers were going to lose. Otherwise, I wouldn't have owned them. We don't know. We can't just look at the results and say for a specific company or whatever, because we don't know the future. We don't know exactly what the drill holes will show us. Only, God and Mother Nature knows what for 100% certainty what that's going to show. We don't know. We can just guess, make estimations, probabilities, and bet. There's a bunch of companies out there that's like, yeah, maybe they have a 10-15% chance of finding a company making discovery. And they're priced like they have a 3 to 5% chance. That's a buy, even though it's like, maybe 85 to 90% chance of failure. That's still technically a buy. If you diversify the risk, though, because permanent losses are something we should avoid. And permanent losses meaning that, this is not going to recover ever, for example, because anything can go down. In the best cases, Snowline went down 50% over 6 months. That was not a permanent loss, obviously, because the day it's higher than the peak before the fall. So that's not a permanent loss. But do we always know if it's a permanent loss or not? Nope. But it's like, you can't just look at stuff like that until you sold, let's say. The game is on. Theoretically, a comet could hit Yukon tomorrow and Snowline would go to zero. So it wouldn't matter if you're up today because it's worthless the next day. So as long as you money at play, there's no such thing as permanent loss or permanent profits typically, unless a company actually went bankrupt, for example. Because if you don't convert that, if you don't monetize that or sell, for example, then it's still a paper loss or profit. Again, forgetting that cyclical sectors will always be cyclical. It's literally the basis of civilization, which I've said. Not having a coherent long-term strategy. That's one I think. It's like most people don't even know why they should win. They bitch and moan about the sector, which tells you that that's a feeling of loss of control. They don't even. I know exactly why I'm gonna win. I know I'm gonna win because this is a cyclical sector and we're near extreme lows. I don't know when it's going to turn up, or I don't know when we're going to hit this sentiment level. I just know that we're going to do it one day. And since I know how much you would make from these valuations, I know why it would be worth it even if it took 3, 4, 5 years. I don't think it's going to take 3, 4, 5 years, but it would still be worth it, technically. If you're up 400 or 500% or 5 years, the average market, the market average is 8 to 9%. So I already know how I'm going to win. I'm going to win because from these levels, some of those juniors are going to go up an extreme amount just from a change in sentiment. And that's why I'm constantly buying, because this has been a continuous layup, months and months and months of opportunities that have not yet gone away. Here, one day, it was the end, and you didn't see so low prices until 8 years later. I know that's going to happen one day, so that's why I'm going absolutely bananas, because I know this. Well, first of all, we shouldn't even be here, but this can turn around any day. Maybe, just maybe, we had the bottom in late 2022, and this is just a very frustrating. Well, again, frustrating. It's not frustrating if you know how cheap it is and that money invested has very high forward expected return. It's frustrating if you want to get rich tomorrow. But here, like, this top was kind of grindy. Top, and it's like, and then boom. So it's like, who knows? Maybe we have a similar situation. Like, we have the absolute top here, maybe the absolute bottom here. Retraces, rallies, but then goes back, not back to the top. I was like, not far off. And who knows? Maybe it could be anything. It's like, Fed does something, BRICS does anything. We just need some momentum, and then this thing feeds on itself. Nothing big changed in terms of fundamentals. But when this gets going, people see that, and they think that if it went up yesterday this much, it's going to be up tomorrow. And sooner or later, they can't hold out. It's going to be FOMO. And opposite happens here, obviously. They've seen so much evidence recently of prices being lower tomorrow, so they just assume they will be lower tomorrow, and every additional day it is lower, they get more convinced that it's going to go lower the next day as well. So then, all bets are off. They stop thinking at all about what's going to happen when this actually bottoms. I mean, literally, you could have bought here and be in profit within what's that, like 2008? 2000, okay, let's say 3-4 years. Sure, it's not huge, but just a few additions here, and all of a sudden you would be up, at least beat the market. So, I mean, and that's what's so fun. It's like I've shown this chart a bunch of time, obviously, and somebody asked me, but how do you know when it's gonna go up 500%? It's like, what on earth makes you think that I need to know when it's gonna go up 500%? The guy who asked me, he bragged about his portfolio, and he was up, I think it was up like, I don't know, 80 or 130% in like 7 years. So like, how can he look, doesn't he even understand that just this move here is more than, his return over 7-8 years? I mean, I don't need to have any kind of precision at all just to beat that. I mean, this move here, for example, that was 450. Yeah, I mean, goes to show. I mean, you could have an average here, and I think you're gonna, make a lot of money. This is just absurd levels. And the only thing we know is that, by definition, since no rally lasts forever and no bear market or bull market lasts forever, we know that every additional day in a bear market is one day closer to the bull market. That means quicker compounding, because this was the same price as this, so at face value people would see them as two, the same thing basically, same price level. And even more discouraged because they haven't seen the rally yet. So if they held out for this, they might sell here, even though by definition this is closer to the next inevitable uptrend. So quicker gains at the same return That's even better buy than here by definition. And then for every additional day down, 1 day closer. This is actually okay, a weekly short. Every additional week lower gets it 1 week closer to the inevitable uptrend. And if it goes lower, it means higher returns as well. So that's why the opportunities at the end of bear markets especially, they go absolutely exponential. Larger returns, quicker payoff. Yeah, and maybe was there a few things more perhaps? Yeah, okay, I've talked about this. Do not realize sell, hold, and buy can differ exponentially. Again, selling down here, in my opinion, is like, yeah, almost generationally stupid. Holding is pretty friggin' stupid. Buying is the only thing that makes sense. That's what I'm doing. And the thing is, like always, let's say we go like this. Let's say we crash 30% more from here. Then you're gonna hear, well, you said this was a buying opportunity. It's down 30%. It's like, yeah. So what does that matter? Let's say you bought here, which I did. I think I started buying somewhere around here. I had to sit through 50% down first, but I bought all the way down, then up. Do you think I complain about that? That, oh, okay, yeah, I had to sit down, 50% loss from where I started, and I already thought it was super cheap. I made a ton of money. Because I just understood it. Okay, it's getting even cheaper. I'm going to make even more on any additional money I put in, and it's going to come quicker. Boom. All of a sudden, every single buy was in fat green. And the portfolio was up like 300% over this period of time. That's the stuff I'm here for. That's the big moves. This is a big change. If we would be here, the big change is like, it could be either up or down. Down here, yeah, there's always potential for temporary more downside, temporary more downside. But we obviously know where the big move is going to be. The next big move is not going to be down. We're not going to go down to zero. The sector is not going away. So if it's priced like it's almost going away, and we know it's not going to go away, it means that when the market figures out that the mining sector will not go away, yada yada yada, then we'll get the big move and it's going to be up. Believing that one cannot have severe paper losses and do okay. It's like, I'm happy to say, I see a few people on Twitter, they're like, they understand what it is we're talking about here. That's like, paper losses are paper losses. It's like, my portfolio gets cut in half every other year. Get cut in half here, got cut in half here, got cut in half here. It's been cut in half here. And I'm getting better and better at picking stocks as well, because I keep learning all the time. I keep on learning all the time. And I spend 80% of my time, or 90%, just thinking about the companies. You shouldn't really have time to look at the metal chart because it's totally irrelevant right now. And this is an example for one of the family portfolios I manage. Because again, it's like, in a high risk, high reward sector, at the end, after a 3-year-long bear market, I'm gonna get shit for companies that have done poorly, which is pretty much almost every single company. But that's just how it is. They believe it's always a bad pick if it's gone down, whatever. It's like, look at what just a few high conviction picks that thankfully seems to be working out well, what that has done. These are in this hodl portfolio, that's a more lower risk one, and it's quite diversified. But it's like, I let Snowline run. The gain from Snowline is over 10 times the biggest loss, paper loss. Well, I guess I think I've sold most of Montoro in this one. But think about that. And this, I think, I don't know, maybe minus 80% or something. But that was not a high conviction. It was a cheap one that didn't work out, or has not worked out at least so far. Who knows? Maybe, fast forward 3 years, maybe Irving is 5-bagged, Line 1 is 5-bagged, and Montour is 5-bagged. That's the thing, we don't know. Everything is paper until it is monetized. Snowland could theoretically crash and be the biggest loser all of a sudden, if you know what I mean. But it's like, this paid for more than 10 of the largest loss. The second one almost 10 times. And this 3 times. That's how, the high risk reward, you can't sell the good cases too soon. If they're working out, that means there's probably more growth ahead. If I sold everything after a double in Snowline, I would have missed the big move, and that would not have paid for 10 of the biggest losses. But people obviously don't do that. They don't even play the winners correctly. They don't have even the patience for that. They probably sold out when Snowline went down 50% because now it's over. And I know people said that. But I thought, hey, like I talked about, I think Snowline, I don't know, how, if it's, especially now, it's at 580 or something per share. I wouldn't say Snowline is super cheap, but it's like, I can easily see it being higher valued 1 year from now and 2 years from now. So it's not the one I would expect to do a 10-bagger anytime soon, because it gets harder, obviously, the more it runs up. But it's like from 400 million, for example, that more upside, obviously. So that's the thing. It's like, because and some guy told me, it's like, well, juniors are not gold coins or something like that. It's like every single quote recommendation you given have been bad. It's like, obviously that's just by definition false. But still, it's just interesting how people, it's like, even if, because that's what everyone forgets, of course, like the winners. Okay, why didn't you buy that one? If I get shit for, if I get shit for being bullish, some cases that didn't do well in the worst bear market since 2012. But there's no credit given for the ones that did well. Why? Because they probably misplayed that as well. If you know what I mean. So that's why they're kind of pissed at themselves, and then they're pissed at you, because it's like, let's say they bought Snowline. They hold out. They got 50% from Snowline and then sold out. That wouldn't pay for maybe many of the 90% juniors that are down 50% to 70%. But that I was like, I held on to it. I didn't know it was gonna work out that way, but it's like, so far it has worked that way. So there's you can have 100 people buy Snowline at $1, and everybody will have played it in a different way. Some might have kept the whole position and made a ton of money, and basically, who knows, maybe, I was gonna say, double their entire portfolio, or like added 50% alone just from Snowline. But some sold after 50%, sold after 50%, then they started running, then they bought in again close to the, let's say, the medium term top, then it went down 50%, and then they sold out. So you lead a horse to water, but you can't make him drink. So it's like, there's plenty of ways to make a mistake, or 100 people that started buying the same stock, their returns will probably look very different. It's like Great Bear, that 10 to 20 bagged over 3-4 years. How many do you think had stayed that long? I think a lot of people got flushed out along the way and over traded and stuff like that. Because I see a lot of people, brag about Great Bear and some other high flyers, but they don't typically brag about their portfolio. So they're, that kinda, tells you that, okay, they're bragging about the, they're bragging about their pick, but they probably misplayed that, but so it didn't really make up for other mistakes they made, etc. That's the best way. It's like if somebody says, now this is how you should do, it's like ask them, okay, what are your long-term returns? Most people have an infinite amount of opinions, and in my case, for example, it's like my intro here is like very unconventional strategy, 100% invested all the time. I don't know anyone else that does that. So that's people who don't do that believe that's the wrong way to go about it. So they're going to think I'm wrong. 100% focus on juniors, well, that typically considered risky. Don't pay attention to most macro things. I mean, there's no shortage of podcasts out there about what is the Fed gonna do? Where's gold going? What are the rates gonna do? Where's the inflation going? What's happening there and here and where? And it's like, so because everybody for some reason believes that's important stuff to know, and I don't really care about that. I don't even know what the Fed rate is right now. So that would, people would classify that, oh, you're uninformed. But okay, still works out. I mean, again, it's like, okay, all of these things that people would typically say is dumb or you shouldn't do or risky. It's like, so far that has worked out great for me. So why should I change that because someone with poor results say that you shouldn't do that? Assume that the market is always wrong. Yeah, I think that makes sense. And it's, of course, going to come out off as arrogant because I can make more money that way, since I'm always long. If the market is wrong and I'm long, like now, for example, I think that market is totally, absolutely dipshit crazy right now, pricing things down here. If I thought the market was always right, that would mean that this is no more of an opportunity than this, because it's always right. That makes absolutely no sense to me, because it's so obviously wrong. Invest like it's a perpetual bear, and conviction like we are in a bull. Yeah, I think that just helps with conviction to focus on picking the actual best companies which you actually believe can be worth a lot more in the future, and hopefully are actually worth a lot more than the price right now. So you don't get fixated on what gold or silver is going to do, because most people that I see, they have a bunch of shitty silver juniors that dilute like hell, and it's they're gonna go up big time when it turns. It's just that I find it very hard to really hodl those ones, because I know that it's like kind of a bad business, and it's like that if they're around, you're probably gonna get saved at the next sentiment spike and all of that, but I just don't find it comfortable. Love bear markets. Yeah, exactly. It's like feels like I'm almost the only one out there talking about, this is a table pounding, we're in deep buy zone. And most people like always trying to trade. It's like, I don't think the bottom is in yet. It can always get, that's the funny thing. When people say right here, down here, people say it can get worse. Nobody says that up here. When it can get a lot worse. This is when people say it can get worse. This is when they, increasingly say that. Up here, they don't say it can get a lot worse. They think it can get a lot better. Again, recency bias. See rising metals as a bonus and not a requirement. If I have a base case, I think a junior has a shot at going up 300-400% in value of the next 2-3 years. If I'm right on that base case, and blue sky would be even more perhaps, do I need to know where the metals are gonna go? Probably not. If they're dirt cheap right now, priced like they don't have anything, and in 2-3 years it will be obvious that they might have a tier 3 or tier 2 mine, that's probably not gonna be given away, even if silver is at like $19 or something, or gold is at $1,700. I don't think so. There's a bunch more, but I think I'll leave it here. Anyway, this was again maybe kind of a copium hopium rant, but it's like, again, this is so important. It's like, last thing would be, it's like, you do not need perfection at all. You just need to, you'll do well if you just avoid the biggest mistakes, like only buying up here and selling down here. If you buy somewhere around here and just do that and pick, above average juniors, or you actually are relatively disciplined and trading and, buy in this kind of zone, you're going to end up making money even if you're in trading sardines. Hopefully the ones that don't dilute you to hell before the next spike, if you know what I mean. So, yeah, and consider me biased if there's any companies I talked about, assume I own them. This is not investing advice. Again, I know I'm not going to take any of your money if things go well, and I'm not going to pay you if things do not go well. This is what I'm doing, and you do what you think makes sense, that you can, live with. And obviously, like, never risk money you cannot afford to lose or will need in us. Like, there's no worse feeling than, I'm going out of my mind just thinking that I want more, more money to buy with. It would be horrible to, like, we actually take another dip 20% down. It's like, all of a sudden, the buys might get 100% extra forward-looking returns, and I'm forced to sell. That's just the worst feeling, because then that it's like, this is just a buy that's become an even better buy. And you're forced to sell. That's not fun. And have gold and silver, physical stuff, some cash in the bank, and cash outside of the bank, because the physical metals, they're the hedge to the portfolio. This junior mining investing, that's still wealth creation efforts. That's still risk. Gold and silver is like the hedge to everything, basically. Yeah, thanks for listening. Bye.